Hi, Pat the Podcast Editor here. Today, anchors, Dan and Lloyd are talking taxes. No, okay, look. Don't click away. Because today, we're talking about tax planning and the changes you can make to minimise your tax liability and potentially save thousands.
The government says, we tax you on these things and we allow you to do these things. And it's going, oh, you allow us to do those things to help us grow our business? We will be allowed. I'll do that.
You'll hear about what they've learned and the actions they've taken that have saved the company a projected amount of over £20,000.
Those business savings, like I said, depending on what sort of business owner you are, you could just take it all. Or you could reinvest it into the business, or you could hire more people, or you could give people pay rises. You know, that's up to you.
Right, let's get stuck in. Pen and paper at the ready. This is episode 86 of the Business Anchors podcast.
We're just a couple of business anchors. Welcome to the Business Anchors podcast. This jingle is slightly too long. This
sounds so boring, Lloyd. Why should anchors continue listening to an episode about tax?
Oh, it is not going to be boring, and I'll tell you why.
Tell me.
If you run a business, you probably are either running a lifestyle business, so basically a business at the size that you as an owner can have a nice lifestyle, making enough money and having the things you want for you and your family to have a lovely life. Or you're trying to scale your business to be really big and massive and make loads of money and be like a gazillionaire. Both require you to make as much money as you can in reality. Just one you reinvest more than the others.
Okay.
And if you can plan your tax effectively, every single year you can have loads more money.
Okay.
Does that make sense?
Yeah.
And I guess why I'm more excited than you and everyone listening is because we've recently gone through a process of basically looking at our taxes and seeing what we can do and if we're doing things right and efficiently and all that sort of thing, and found out that we really weren't, and that our business could save a huge amount of money that we can reinvest into our team or equipment or we could be greedy business owners and just take it all, which we won't. My phone's ringing, but it's not supposed to be on
That's fine,
vibrate.
just keep going.
Okay.
So we've got a bit of a history with accountants, haven't we, Lloyd?
Yes. So we had an old accountant that was absolutely rubbish.
And we did a podcast episode about it. Episode 19, Are All Accountants Rubbish?
Yeah.
And we really pissed off a lot of accountants, didn't we?
We did, but I think we only pissed off the ones that didn't listen to the episode.
Okay.
That's what came from it.
It was a hooky title.
Yeah,
We weren't
people that saw the accountants and people that have loved ones that are accountants saw the title and got angry. But if they'd have listened or watched, they'd see that we were saying like our one has been really rubbish, and we were really shocked. And going into what we heard about brilliant accountants, we've now switched. This was years ago now, but to Telford's accountants.
Mark Telford.
Mark
They're
Telford,
bloody good.
legend. And I couldn't think more highly about our accountants. You know, they've helped us with this kind of thing that we're going to be talking about, and helped us in a lot of ways, and are really proactive in helping us have what we need to grow our business.
Go to Telford's if you want good accountants, everyone.
Yes. Call to action. Telford's accountants. But seriously, also like DM me and Dan if you want to get put in touch with Mark Telford if you want a better accountant stuff, because they're brilliant.
Do you know how excited you were about this episode?
No.
Because when I went to sneak off for a sneaky McDonald's the other week, and just have some time to myself, sometimes I like to do that.
You do more often than I first thought, actually.
Yeah, you just wouldn't stop ringing me and telling me about these things we can do to be better with our tax.
Yeah, I know, and it sounds boring, but the more I was discovering, imagine, you know, we all work so hard. The team here and us as business owners work really hard to try and make sure the business makes enough profit to be viable and to grow and for us all to earn more and work on more exciting stuff. And I was just discovering more and more things like, oh, this year, imagine just finding out this year we could have an extra £3,000. How hard we usually work to make £3,000, but it was just a fairly simple thing we needed to do to make that happen.
And just to clarify, for me, the stupid person, this isn't avoiding tax, is it? We're not like telling people to do sneaky stuff that...
Well, interesting you say avoiding tax, Dan. Some of it might be.
Oh,
But
okay.
to be clear, okay, just so no one thinks we're busy. We are. I mean, we are busy. I meant to say dodgy. Completely different word. We're not doing anything illegal, and I don't think we're doing anything immoral. You can judge that. But just to be clear, okay, I've written this down.
This sounds very
I want to be
efficient.
clear on these different types of things. One thing, tax planning,
Okay.
which is the main thing.
Is that what we're
talking
doing?
about, which is the main thing that we're doing. Tax planning. So listen to a good definition of tax planning. As part of good governance, companies will seek to minimise their tax liability through tax planning, making the most of the tools and mechanisms which the government makes available to them specifically for this purpose. Allowances, deductions, rebates, exemptions, etc. They will make choices about how to pursue their business goals in the light of all the implications which include the tax consequences.
Okay.
So that's tax planning, which is mainly what we're talking about. So the government says, we tax you on these things and we allow you to do these things. And it's going, you allow us to do those things to help us grow our business? We will be allowed. I'll do that. Oh, you tax this thing? Okay, we'll be careful not to do too much of that and get taxed loads. So that's tax planning. I think everyone I've spoken to agrees, good idea. We weren't doing well enough. We're going to talk about it. Next level, tax avoidance.
Ooh, that doesn't sound as
That's
good.
not the final level either.
Okay.
Tax avoidance is more of a grey issue. The term tax avoidance is used to refer to legitimate, but maybe aggressive, use of things such as financial instruments and other arrangements to obtain a tax result not intended or anticipated by the government. The use of overseas tax havens is one example. Most of the debate about tax avoidance has centred on the taxes businesses pay on their profits, corporation tax in the UK, but other taxes can also be affected, including VAT.
So that's not illegal, but it's a grey area.
Completely legal. But it's, I suppose the difference there, tax planning is the government's view of what should be taxed and not, and you going,
Okay, thank you. We'll do those things.
We'll do exactly as you say. Tax avoidance is going, oh, hang on, there's this rule that you cannot be taxed if you do that. That's not what the government intended, but we want to do the best for our business to make sure we can grow and have the money we need to grow. So we'll make sure we make the most of those.
I feel like this goes down to another level.
There's a third level. Which, to be clear, we are nowhere near and would never consider. Okay? Third level.
Okay.
Tax avoidance is different to tax evasion, which refers to a situation where a company tries to reduce tax liability by falsely suppressing income or inflating expenditure, recording fictitious transactions, etc. Evasion is fundamentally illegal. Boo. So just to be clear, from those kind of definitions, tax planning, good idea, sensible. Tax avoidance could be a good idea. Bit of a grey area, though. Mm-hmm. And morally questionable, worth a debate. Tax evasion, illegal.
Boo.
Basically just lying because you're greedy. And
Okay, I'm glad we've cleared that up.
do you get where we are?
So the things we're going to be talking about in this episode don't go in the bottom.
No, definitely don't go in the bottom. No,
The bottom category.
That could not go down as a business expense. Okay. With certain industries, maybe it could. We'll have to speak to Mark Telford. So what we do and what we're talking about, not tax evasion, don't evade tax.
Okay,
illegal.
okay, I think we got it. We got the picture.
Interesting though, before we get into these ways of saving you hundreds of thousands of pounds, which we're going to do, listeners, previously my personal view, being a brilliant person, and
you're just so
having
ethical,
brilliant morals, I used to completely steer clear of the tax avoidance, in what I would want to do for the business.
Tax planning. Oh, no, so that tax avoidance, the middle one.
Yeah, the middle one.
Yeah.
And we weren't very good at the tax planning, the one that's completely fine.
Yeah.
But the way I thought about it, the saying tax avoidance, I thought, well, that sounds dodgy. We don't want to be a dodgy business, and we never go near there. My views have changed. And this is my personal view, guys. So people may disagree, but over the last couple of years, my personal view, I believe a lot of the ways that we spend money in our business, I think, have a bigger positive impact than the way the government spends money. So I used to think, well, we want to pay as much tax as we can. That's the moral thing to do. And now, because I feel we've got so many positive plans, we have our positive impact plan we've been putting together, and we're trying to do things to positively affect the world and the local community and all this sort of thing. And I now think, actually, my personal view is if we can completely legally reduce some of our tax and spend it in those positive ways and offer people more jobs and that kind of thing, I now feel that is morally
I guess
good.
that only counts if you are spending the money in a good way, though, rather than us, the business owners, just taking it.
If you and I were just taking huge salaries, I would feel differently.
Yeah.
Rather than knowing, I guess you'd have to be on the inside of the business to truly know.
To some listeners, that could just sound like an excuse. Sound like an excuse.
Yeah, I agree. That's why
we trust ourselves with our money, so we're not going to pay as much tax because
I completely agree. It sounds like that, and so I think as business owners, only you know in reality if you're doing it because you want to earn more money or because you feel it's actually the right thing to do. But
and one of our values at Knowlton is do the right thing.
Do the right thing, which is why
are we doing the right thing? I think we are.
Yeah, that's why it's the question. I guess I know in my mind, from what I currently know, I might learn things that will change my opinion. I feel we're doing the right thing and having the most positive impact we are on the world by taking this approach.
I feel like that was a really good setup. Yeah. I feel we've got a good background. Now, I think all of us want to hear, Lloyd, what do we do for effective tax planning, or what things can we actually do? Because you've called me up and told me loads of stuff. I'm sure there's some stuff that listeners...
So, listeners, going to gain some value. For our business, from making these changes, we're projecting a saving of £21,000.
Oh, that is
this
mental.
Year.
Jeez.
Okay. Good. So that saving, just to be clear, comes from savings that hopefully our employees can make, savings that Dan and I as business owners can make, and savings that the business can make. So those business savings, like I said, depending on what sort of business owner you are, you could just take it all. Or you could reinvest it into the business, or you could hire more people, or you could give people pay rises. That's up to you. But that's how this is made up. And thinking about it, over 10 years, that's £200,000 if your business stays the same size. Think about what you'd do to have an extra £200,000 in the next decade. So now going into it, Dan.
Yep.
Tax. Can you tell I love tax?
You're getting excited by this.
So I'm just going to go into some of the things that Telford's accountants have really helped us with. Again, Telford's accountants are the experts. Speak to us and we'll put you in touch.
Yeah, do we need to do like a this isn't financial advice, anyone?
Yeah, oh yeah, we should. This I'm not a financial advisor.
We don't have a clue what we're doing.
This isn't financial advice. I'm telling you what we've done and what we've been told to do, and think, oh, that's great. Don't listen to me for advice, though. This is just purely for entertainment. Okay, didn't think about that.
Got all that out of the way now.
Yeah, okay. So, firstly, I think this is the one that probably most business owners might already do. The others, I think, potentially they don't. But if you don't, you really need to. So, it's paying yourself in the most tax-efficient way as business owners. So, I was putting off taking these. I kind of knew that we should, but I was putting off taking these actions previously because there's lots of important stuff to do in the business. I was thinking I'll get to that at some point on my to-do list until I went through it with our accountants and realised there's actually a significant difference if we do it this way. So Dan and I, how we take our salaries, obviously employees have to be paid by PAYE, normal salary. As business owners, there are different options. So there's a £2,000 a year dividend allowance. So as a business owner, each individual can take £2,000 out completely tax-free. And that's on top of the £12,500 that you can take completely tax-free through tax-free through your normal PAYE salary. So that's the first thing.
So that's like
that
14,000 not taxed a year.
Yeah, exactly. And then for most people, it makes sense to pay yourself the low salary of 12,500 and take the rest of whatever you want to make up your salary in dividends. And so I would really encourage people to look at that, because on dividends, you don't pay things like national insurance and employers' national insurance. And I was really shocked about how much that equated to with Dan and I. And also, Dan and I haven't even, we haven't increased our salary because of that. We've just kept it exactly the same. But with the changes we've made, we've got a chunk of money left in the business each month that would have previously been taxed, basically. And again, this is just doing things that are completely legal and fine, and you're advised to do. Not advised by me, though. Not financial advice. So simple but effective.
So that's the one that most people will probably already be doing. But if you're not,
as business
that's the biggest one that do that.
Yeah, because that's something really quickly you can change. Whoever's doing your payroll, or if you're doing it yourself, you can kind of Google. There's literally Google like comparison of PAYE and dividends, and there's calculators that work it out for you. So really easy.
Cool.
Do you want the second one?
Give me the second one, Lloyd. Save me money.
Maximize companies' private pension contributions. So, pension.
Yeah.
Yeah. This one, I was really, again, so simple. And there's probably listeners thinking, obviously do that. But for our pensions, Dan, we can have a private pension and put money into that pension, and it counts as a cost to the business. So rather than us as employees, so before anything's taxed, it gets paid into our pension. So when we're oldies, we can have a life where we're comfortable, hopefully. But if you think about it, if the employer's making that contribution, if our business is, that also means that we make less profit because that counts as a cost. So effectively, and again, there might be limits on this I'm not aware of, but if you just put all of your profit into your pension, your pension, there wouldn't be any tax to pay on your profit because the company.
I would have thought there's
profit.
limits on that, though. No,
potentially.
Okay.
Yeah, not business advice, but I'm not aware of any limits.
Okay.
Yeah, but certainly at the level we are, we're not fancy, we're not millionaires, we're not operating at extremely high level. It's saved us a significant amount doing it that way. Dan and I previously were paying into pensions as kind of employees from our personal contributions, as well as the employer contribution, like with all of our team, but didn't realise that's a thing that can happen.
So pay more into your pension?
Yes, and the thing with that, obviously boring advice, pension is always a good thing to put money into. But if you think, like this saving that Dan and I realised can be made, that can either allow us to put more money in our pension, but actually overall our financial situation not change, or we can have more money in the business. Both over the long term could have a huge effect. So if you think, if we put more into our pension now, because that's invested and over time, fingers crossed, that will multiply. If we put, if there's an extra £200 a month in your pension, over the years, that could equate to an extra lots of money.
Yeah.
So really positive. Or if you just leave that money in the business, that's kind of the extra that you're saving, you can reinvest that. And I think as business owners, if you're a sensible business owner, rather than just taking profit out, you'll be reinvesting any money that's left in the business. So if, like I said, all these savings equate to 20,000 this year, we can reinvest that into our business by either paying our team more or hiring someone new or getting new gear, and then that money can multiply by 2, by 5, by 10 over the years.
Cool. So pay yourself in the right way as a business owner, pay more into your pension. Number 3, we got
number 3. I didn't realise this was a thing. Probably obvious. Life insurance. So anyone that's homeowners, usually people end up getting life insurance as part of their mortgage. It's a requirement by most lenders, I think. So basically, if one of us dies, hopefully
positive.
your mortgage gets paid off, your family is hopefully okay, and that kind of thing. Again, I didn't realise this could be, as business owners, we can pay this through the business. So again, we pay for it before we're personally taxed on that money. So we save that. And because the company's paying for it, again, it's a cost to the business. So the company makes less profit and pays less tax on profits. So double whammy again, and really simple just to change. It can be your current life insurance policy and change the account that it's coming from and include it as a business.
Makes sense.
Yeah. Boring and effective.
Pay your life insurance through the company. That's the third one. Cool.
Yeah. Really
Cool.
simple.
I need to change mine then. I need to do that.
Yeah, both of us do.
Okay.
But we're planning to do it.
Okay. Tax planning.
Yeah.
Number four. Save us more money,
now,
Lloyd.
This one I really like, trivial benefits, because it's beneficial for you as business owners and your employees. And I think it's something that we're planning to utilize as much as we possibly can, and really helps everyone involved, which is really good. So this is trivial benefits. So basically, this is anything except cash that's less than £50 that can be given as gifts to the team.
So is that items or vouchers? Or
I think an example of this that we've done recently, one of our employees moved home, and as a business, we wanted to give him kind of a housewarming gift. So if we were to give him a bonus, or her, it could be anyone, they would be taxed on that.
Yeah.
So if we were like, this person's working really hard, they're moving house, and we'd like to give them a little bonus in their pay packet, they're going to be taxed. Our business is going to be
classed as a cost to us.
It would still.
Oh, it would still.
But they're going to be taxed, so they're going to get less value. We're going to pay more employers' national insurance. They're going to pay more national insurance. Whereas
if you do it under this,
doing it this way, if you could get perhaps a gift card, as long as it's less than £50, or a maximum £50, it counts as a business cost. So the business makes £50 less profit, which is the same as before, but the business doesn't pay employers' national insurance, and the person who receives that gift doesn't pay, it still gets the full £50 value.
And what's that called again, sorry?
Trivial benefits.
Trivial benefits.
So I believe there's not financial advice, check it yourself, a limit of £300 per year for direct. So me and Dan couldn't just pay ourselves in gift cards. Like we could get £300 a year that way. But I think for employees, don't quote me on this, but I don't think that limit counts. So and this doesn't have to be gift cards. That's just obviously a good way of passing value to your employees without them being taxed. But this could be wine. This could be
cigarettes.
I'm not sure about that. I assume it probably could, but I don't know. Or chocolates or whatever that you think
presents
that your employees would appreciate most. They can get the value without being taxed, and the company saves money. So we're going to try and really make the most of this. Okay, I think that's a good one because it affects everyone positively.
Trivial benefits, love it.
Okay,
is that also number 5?
Number 5. There's a load that I won't go into as much detail, but 5, childcare. So I'd heard of this, but those things in business, you kind of think, I've heard of this, I don't really know how it works and all that kind of thing. So it's salary sacrifice scheme for childcare. Basically allows for up to £2,000 of childcare for anyone in the business. To be paid by the business and therefore paid before tax. So again, that usually equates to like a 20% saving on that. So if you've got employees that currently pay anything up to £2,000 for childcare, you can set up a scheme that it basically comes out of the business account and comes out of their pay packet before they get it. That saves them.
I've done this recently.
20%. We've done this for Dan and
my
obviously
son.
Anyone on our team in the future that has children and wants childcare will be offering that.
So you're basically saving 20% on what you'd normally pay for childcare.
Yeah. So this is the benefit to the employees or us as business owners, 20% off childcare, which I think is if that benefit's
it's quite a lot. Childcare
possible to give to your employees. Why wouldn't you?
Yeah.
So I think that's a really brilliant one, and obviously parents that are employees, they've got a lot going on, a lot to manage. If you want them to perform at their best, you want them to be able to have great childcare for their children and not worry about the financial impact. So any help, I think, is really good. And as business owners, we have the same ability to do that.
Yes.
So really good. Quick fire round of some other things.
Yeah, go on. Quick fire round.
Speak to Telford's accountants to help you with this and switch them as your accountants because they're brilliant.
We did like a review thing and they gave us tons of these things, right?
Yeah.
And we've got a plan to implement
far more than we're talking about now. And like I said, a mixture of things that can positively affect our employees, us as business owners, and the business in general. So really positive for everyone involved. And it may be, I think we had a lot to learn and improved a lot. It may be that you already do most of these, but there'll be 2 or 3 things that might, for example, we don't currently want to have company cars that are electric, but I found out that if you're looking to get an electric car, doing it through the company as a company car, currently quite a good way of doing it to save money. Not so much on normal cars, but there's things like that. Different things will be relevant to different businesses.
Cool.
Quick fire.
Fire.
Mobile phones. Again, if you're not doing it through the business, make sure you are. Simple, stupid thing, but you can charge it through the business if you're using it for the business. Most of you probably will be.
Yep.
Home working costs. So won't go into the details, not financial advice, but if you're using your home as an office, there's lots of benefits that you can claim and that kind of thing to make sure that I think you save some tax,
like desks, chairs,
and costs,
stuff like that?
Making sure that they go through the business. Yeah, which previously your spare room might have been part of your home, so you'd have the cost. Now, if you're using it as an office, there's lots of ways you can.
What if you want a new bed and you work from your bed?
I think that would be controversial.
Okay.
I mean,
just asking for the listeners.
If you, not financial advice, if you genuinely worked from your bed, I think
you're mental. First of all,
yeah, it's strange, but I think that would be the sort of thing that can count as a business expense. But obviously, like we're saying, we're not encouraging
you to work from your bed.
tax and just buying your bed because you want to. But I would assume if you genuinely worked from it, it would be a business.
I don't think many people do.
Not financial advice. As I said, electric company cars, cycle to work schemes. So the team can have discounts on bikes, and bikes can be paid through the business and paid back over time. Mileage claims and congestion charge if you're traveling. Lots of things like that are smaller but all add up. Loads more stuff. Sorry for talking about tax for so long, but I do think the fact that, like I'm saying, the changes we're making, even if the business stayed the same size, would potentially be saving us 200,000. If the business grows, they may save us 500,000 in the next decade.
That's mental.
Or more than that, which is a huge impact. So I would encourage you, even if you're a smaller business, if maybe there's 2 or 3 of you, and it might just be, we should be paying our life insurance through the business and our mobile phones, that might save you a few quid this month, but over the next 10 years, that's going to save you loads. And it's, I
think you've made up for not being in the last episode by speaking loads, which is...
My house was very COVID-y for a while.
It was, wasn't it? But I'm sure the listeners are happy for you to be back, Lloyd.
Well, I'm not sure. I've just come in with a really dry subject.
No, but there's some, it's good to chuck in a crap episode every now and again that's value adding.
Oh, thank you. I just want to be really clear as well. 2 things. We're not finance people, so we've been talking about what we've learned, but please don't take any drastic action.
Don't action any of the advice we've shared.
No, but don't take any action without doing your own research and that kind of thing. But also, like I said, our accountants are really excellent, and I'd highly recommend them. Telford's accountants. Yeah. And like I said, either look them up and say Lloyd and Dan sent us here.
Do that. Actually,
we don't have like a deal or anything, by the way. That's not one of these.
We're not making the money.
We're just trying to be good people, honestly. Or come to us and we can connect you with
Mark, if you're listening, our accountant. Obviously, this is a free promo for you, so we'll be expecting a discount on our accountancy fees in the future.
Yeah, that's the real reason we've done this. We're doing the right thing. We're taking all these positive actions to help people. Trying to pressure people into discounts. Next week, we'll be doing an episode on how good our cleaners are if they give us half price discount. Half price discount? Does that make sense? Yeah. So thank you, Telford's Accountants, for being brilliant, and for all of our suppliers that are really helpful. And thank you for listening, guys. Hope you enjoyed it. Sorry it was about tax. Next one will probably be more interesting because Dan's talking about stuff.
Yeah, next week we're going to be talking about how we've developed our new marketing communications guide that everyone in marketing and business should be creating for their business.
Cool, that sounds really exciting, Dan.
Yeah, so if you want to listen to that, then just carry on, stay here, and it should automatically play when it's live.
Great. Unless you listen to this straight away, then you have to wait a week. Don't wait a week. Like, do what, sleep, go to work, unless you're late to this, and then you can carry on.
And we'll see you in your ears next week.
Okay, over to Lloyd and Dan talking about marketing communications. Maybe.